There's certain types of workflows that will never need to be done by a human again, and I think that's a good thing.
Gabe Stengel built a $2 billion AI tool to automate his old investment banking job. But for 2 years, no one was buying it.
The early days were pretty terrible. I probably had 30 passes that round.
Now more than 35,000 bankers are using his tool Rogo, which does in minutes what used to take them a week. And Lazard, the bank that Gabe quit, is now a paying Rogo customer.
I can do all of these workflows in 1/10 the time with 1/10 the resources.
Last week, 2 of the world's largest banks signaled major AI-driven job cuts. Investment bankers are especially in the crosshairs as the job is indisputably changing. And the work your banker did last year could now be an email. Welcome to Term Sheet. I'm Allie Garfinkle. And on to this week's news. The SpaceX IPO is upon us. After more than 20 years as a private company, SpaceX is officially going public over the next few weeks. Now, regardless of how you feel about Elon Musk, about SpaceX, about Tesla, this will be a genuinely historic event. It will be, by every account so far we've heard, the largest IPO of all time by a substantial margin. Last week when the S1 dropped, it revealed some genuinely shocking things. I would go so far as to say it was a banger of an S1. 3 things that you should know from it. Number 1, revenue is up at SpaceX, but so are losses to the tune of billions. Number 2, Elon Musk's pay package is tied to, and among other things, establishing a colony on Mars of at least 1 million inhabitants. And number 3, Anthropic and SpaceX have an existing deal to the tune of billions, which is genuinely surprising given that Musk has previously described Anthropic as, and I quote, evil. SpaceX is widely considered to be going public in the vicinity of June 12th, and this is also happening at a time when OpenAI and Anthropic are also widely rumored to be considering going public. Now, I'll believe that when I see it, but what do you think? Are we headed for a red-hot IPO summer? Let me know in the comments. And now for a dispatch from a very different corner of the AI boom. Here's Gabe. Gabe Stengel, thank you so much for being here.
Thanks for having me.
Rogo is bringing AI to Wall Street. But what does that actually mean? Like, walk me through a day in the life of an analyst, for example, using this tool.
I actually think in some ways it's easier to think about the market and the firm perspective versus just the analyst. It's pretty easy to imagine a junior banker, working in Excel more effectively, working in PowerPoint more effectively. For us, bringing AI to Wall Street means transforming what high finance looks like and thinking about reinvention of M&A and capital markets and making them radically more accessible, radically more efficient. And to me, it's helpful to think about the macro, i.e. if it takes 3 months right now for a banker to go to a company, maybe it's Glossier or someone else, and say, hey, how do you get ready for a process that might take 3 months and then another 3 months to consummate an acquisition. And I think 5 years from now, that sort of M&A process can take 48 hours.
Now walk me through a couple of use cases, because one of those things is I think there are going to be a lot of people watching this who are going to be like, well, I've never worked on Wall Street, or even if you have, they may not be able to necessarily imagine this.
What a banker does is very different from what an investor does. Some of the underlying workflows are the same, but what a banker is doing is helping a company sell itself, or helping a company buy another company, or raise equity, or raise debt. It's less about investing your own personal capital in a business. But if you're going to help a business sell, you need to help that business value itself. Think about what are similar businesses that have been bought and sold so that when you're presenting it to the market, you have reference points for how to value that business. And that kind of valuation work, positioning work, strategic work to understand, the value of a business is very similar to what investors do. But for a banker, the kind of end-to-end process is the value add, not just that analytics work. And so if you're a great investment banker, it's about finding clients, i.e. how do you go into market and find companies that want to buy other companies, or companies that want to sell, or companies that want to go public and raise equity. Great, once you've done that, it's how do you help value them? How do you help actually think about what the business is worth? And then how do you find requisite buyers who are prepared and agree with your valuation, either to buy that equity in a public offering or to buy the whole business? And that's still, abstracting away a lot of the complexity. But if you think about that full life cycle, what a junior banker is doing is less often speaking with clients, finding deals, speaking with potential buyers. It's more often the blocking and tackling around saying, what is this business worth? How do I get their financials, get a full picture of who they are, and then value, the price per share? And so that happens in Excel, and then it's presented in PowerPoint.
Now, walk me through your life as an investment banker before this, because you actually do have experience with this.
Yeah, so I began my career at a kind of storied independent bank, Lazard, that is known for
Did
M&A
you always want to be a
advisory.
banker?
No.
What did you want to be when you were a kid?
Probably astronaut is the cliche answer, or MBA player. But I studied computer science. I loved engineering. I interned at a quant trading firm, interned at a big software engineering firm. And then I kind of serendipitously met an MD at Lazard who pitched me on, hey, why don't you come in and serve as a data translator between the M&A teams and between the data science teams and help us think about, reinvention of this business. And when I was an M&A banker, I kind of loved it. I covered healthcare companies. So we worked with large healthcare companies to think about what businesses they should buy. One engagement, we were speaking to the CEO of a $100 billion healthcare firm, and he wanted to buy an oncology company. I did not know what oncology was when I began at Lazard, but it's basically...
You were what, 22?
22, something like that. But you got to sit in the rooms with these, business executives who shaped markets, who shaped companies and industries, and think about real business strategy tied to financials. And so I spent a lot of time, doing the valuation for the companies they were interested in buying. But then you also got to overhear, your sophisticated banking MDs speaking with these CEOs about the approach, negotiation, how to value the business, why it fed into a strategic mandate. And that was fascinating.
What was the most surprising thing you ever heard as a listener in one of those rooms?
We advised a company that was trying to buy another business, and that business was worth a few $1 billion in public markets, and they offered double that. And the CEO of the business that they were trying to acquire just said no. And it was shocking to me that someone could offer twice what the business was worth, but this founder was so mission driven, believed so much in what they were doing, that even though they would have had $1.5 billion wired to them directly the day that acquisition closed, they could say no. And to me, it made it clear, well, M&A is a lot more than just valuing businesses. It's personal, it's emotional, there's negotiation.
I started my career covering consumer M&A. I did a lot of cosmetics M&A, sort of at the height of the cosmetics M&A boom a few years ago. I guess, the better part of a decade. But to your point, a deal is never just a deal. It's never just about money changing hands. It's emotional. It sounds like from the way you talk about the story, you actually admire it even now.
A deal is always emotional. I mean, even think about buying a house, right? It's
So
just a
emotional.
transaction at the end of the day, but will people do that without thinking it through, without feeling it, without calling their parents? I mean, the whole thing can be emotional.
So you quit Lazard when you were 23?
23, yeah.
23? Why?
Rogo, my business now, AI platform for high finance, was actually based on my thesis in undergrad of AI assistance for finance. And while I was at Lazard, while I was doing the banking job, it became so clear that what I had worked on as an undergrad would be relevant in my life as a banker. And GPT-3 came out, and I went to my co-founder, John, and said, hey, John, that kind of crummy tool that we made could now actually be pretty good. And so we left to start this business.
How did you know the technology had gotten there?
So the original versions of our tool and these kind of NLP techniques for parsing natural language utterances and turning them into instructions for a machine was really called semantic parsing, and it was based on context-free grammars and these kind of like almost rule-based systems where if you said, run a model on this, you picked up the word model and you said, great, let's run this Python code. GPT-3 was a radical reinvention of that kind of technique, and it was completely different. And it was more about the scaling of deep learning and these algorithms that were clearly going to work at kind of massive scale versus these kind of janky rule-based systems.
Now, the early days, what were they like? Because I can't imagine it was easy getting some of these folks to talk to you.
Yeah, the early days were pretty terrible. Both
How
didn't know how to
terrible?
sell, we didn't know how to build, we didn't know how to hire, we didn't know how to talk to investors. John and I used to joke that it was the most expensive form of business school. And we also used to joke that we should get back in contact with the associate VC who did diligence on us and ask who he spoke to that wanted the product because we couldn't find anybody. And so it was pretty miserable. And the reality was the market wasn't ready for it, right? ChatGPT actually hadn't come out. It was just GPT-3, and so that kind of wave of AI hadn't washed over the industry and made it clear that it was going to be transformative. And so you just had John and myself, who really were, had just only spent a few years in investment banking, trying to evangelize what AI was going to do to Wall Street.
What were those early conversations like, or were there no conversations at all?
No, there were early conversations, but it was just, that magic moment it was hard to show people. Like the technology wasn't quite there. So unless you had a deep kind of empathy for how different LLMs were from prior techniques and how well they were starting to work, it wasn't clear that you could extrapolate towards everything that was going to happen, right? And even back then, our vision was kind of more blinkered, right? It was, how do you make junior bankers a little bit more productive, a little bit smarter? It wasn't, how do I radically transform what M&A and capital markets look like? I mean, even we had a hard time thinking about, what does this actually mean? What are the second order effects? And it was very hard for us to kind of communicate that to bankers, investors as well too.
Well, and it sounds like part of the challenge was just that you couldn't show that aha moment, but it also sounds like the conversation around AI. We forget now what the world was like before ChatGPT, but I remember when ChatGPT came out and everyone was like, what is this thing? And it sounds like Wall Street had that moment too, after you'd been trying to have the conversation for a while.
Oh, for sure. I mean, John and I never used the word chatbot or AI because there's been this prior wave of technology where chatbots were kind of a letdown. And so if you came in and said, hey, we're, this AI chatbot tool, people were saying, well, we tried something like that 4 years ago and they kind of sucked. And so we did all this mental gymnastics to like not say it was AI because, didn't
What
feel
did
like
you
people,
say instead?
Natural language interface. It was a terrible marketing term.
So that went over great.
Yeah, it was.
So
it was pretty
when
good.
did it change? When was the first customer?
About 2 years ago, and it was really, kind of the 4.0 models, GPT 4.0, where the quality of the LLMs was strong enough to do tasks that were credible and you could see and you could demo live. Before that, the models weren't quite smart enough.
Now walk me through the sequence of no's and how that felt and what it actually meant to finally get a yes.
I would say it was, the kind of delta between momentum and lack of momentum to me. It is very clear when people say yes, why they are saying yes. And when you have the wind at your back, why there's wind at your back, right? Is it the product? Is it the moment in time? Is it the zeitgeist? Is it a specific buyer? When things are not working, it's very hard to piece out why, right? Is it because I'm bad at selling? Is it because the product isn't good? Is it because I've misidentified the problem? And so it's very demoralizing because you actually don't know what's going wrong. Is it me? Is it the market? Am I an idiot? There's all these things. And so that 2 year period of us constantly pitching, changing the pitch, building, being unable to convince people, it's hard to identify what the failure is. And so it's hard to improve. And so it almost feels like you're constantly doing this breadth first exploration to just get lucky, right? Like, how do you have a lucky break that then you can double down on? And that lucky break didn't come until we started demoing and positioning a very specific version of the product, about 2 years ago.
It's funny. I remember covering a very early round for you guys. The market was completely different then. And it was kind of like, oh, this is going to be a really helpful tool for some bankers on Wall Street, maybe. It was before the partner and compete model in AI had fully emerged. But when you sort of think about the momentum you've gained since then, when did you know that the momentum had shifted? And how did your relationship with venture capital evolve through that process?
Which was the round you covered, the A or the C?
I think it was the A.
Yeah, the A was when we were starting to get kind of branded.
It was clear you were going somewhere, but if I'm honest, I was a little surprised by how quickly everything picked up. I don't know if that honesty helpful?
No.
I don't know.
I mean, it was, look, Keith Raboy from Coastal Ventures led our A. I probably had 30 passes that round, and Keith was actually the only yes. It wasn't like, oh, great, we had a bunch of term sheets, and we picked Keith because he's a legendary investor. I love Keith. He is a legendary investor.
He is
the only person who said yes. I actually remember sitting down with Keith because I could only schedule with him, about a month and a half after I started my process because he was so busy that I couldn't get time with him. But because it was so late, everyone had already said no, right? Like, I had already gone to IC with a bunch of firms and they had all said no. And I sat down with Keith and Keith just goes, all right, Gabe, I get it. AI for Wall Street, it's consensus, it makes sense. I don't like consensus bets. Like, I like to be contrarian. And I was like, Keith, well, if it's so consensus, why did everyone just say no to it? And he kind of perked up. And that was kind of the moment that changed in my conversation with Keith. And he saw, what we were doing, and he understood it in a way that other folks didn't. And I actually think the kind of, mental tar pit that other investors fell into is they said, we're investors, we work in finance, we should be able to use this product today and get the value out of it. And they didn't have vision for where it was all going. And so they ran, one question or one workflow and said, oh, this doesn't perfectly address all of my needs as an investor today, it's not going to work. Whereas Keith was just like, oh, this is obviously a huge market. There's really no one else situated well to address it who has the finance background and the technical background. I'll bet on that.
To your point, there is also a lot of investors, particularly in venture, have at some point been bankers. So there's probably the idea of, well, I know this space, I know this product, I know what it can be. And I'm going to bring back something you referenced towards the beginning, because I think this is an interesting market when it comes to articulating the future. You sort of draw a distinction between where finance has been and where it's going. Where do you think it's going?
I mean, I think high finance will kind of emulate what has happened to other parts of the fintech financial services ecosystem. And I think M&A and capital markets will become more and more efficient and automated. And I think if you work in private markets and you want to think about selling a business or you own a private market business, it's going to be much easier for you to tap into capital markets and transact. And what happened to public equities over the last 20 years, where it become easier and easier to just buy a share of a business, and so the second order effects are now you can buy an ETF, for 50 basis points that bundles all sorts of different products. Those sorts of things are going to happen in private markets as well too. And I think people perennially underestimate both the need for kind of human in the loop in fintech, but also underestimate the size of these markets. And to circle back to the kind of buying a home example, 20 years ago, you would not have ever thought about buying a home without speaking to someone, right? Like, I'm about to get a mortgage. This is a huge decision. I need to speak to my local bank branch about that mortgage and what it's going to look like. Now, you can go to Rocket Mortgage and get that in 20 minutes. And actually, there's just as many people that deal with human real estate brokers because there's still emotional parts of the transaction, but so much of the actual financial services can be provided, programmatically.
This is actually a great segue into sort of the questions around humans, jobs, AI. I think we should start with Felix. Now, you named Felix after a very famous banker, Felix Rohatyn. Why?
Felix Rohatyn was famously both a great investment banker, but also served the public good and was a great New York citizen.
He saved New York City from bankruptcy.
Saved New York City from bankruptcy. Felix kind of typifies that prior era of investment banking that was about apprenticeship, advice, working with clients, forming relationships, versus just the kind of like factory model that sometimes capital markets becomes of just churning out deals. And as we think about the next decade of high finance, we think there's going to be a return to this apprenticeship model where you invest in people and relationships and differentiated insight and advice. And the type of work that bankers are doing has changed radically over the last 20 years. And as it changes, what stays consistent is that the best bankers are relationship driven, have high trust, et cetera. And one of the things Felix would say if you could find him on the floor at Lazard, and I was not around to do this, but Rahul Rekhi on our team was that originally a lot of bankers used to call up their clients at 9 a.m. on a Monday and say, this is where your share price is trading. And that was the kind of novel data that they provided because it was very hard to access that. That is obviously not part of the value proposition of being a banker today because anyone can access that on Google Finance. And yet you still need investment bankers to help you deal with an order of magnitude of harder problems than just, finding where you're trading.
You said something really interesting, that the job of an investment banker has changed over the last 20 years. Walk us through exactly how.
You used to have to print out the kind of PowerPoint pages into a book and deliver those books to people before meetings. Now you can send it over email in a PDF.
Crazy.
Well, but seriously, it's like, imagine if 10 years ago someone said, hey, guys, we're going to automate the printing out and delivering of these books. People might have said, well, what are the analysts going to do? It's like, well, I don't think analysts are doing that today. And I don't think they're any less busy as a result. I think the jobs change. And this is an industry that's competitive, that wants to add a lot of value, that wants to do more deals. There's always more to do.
Now, Rogo started as something that you thought would be a helpful tool. And now it's automating whole workflows. How has that changed for your customers?
Both Wall Street banks, but the kind of all enterprises writ large have seen how transformative AI is going to be, but are still trying to square the circle on are we seeing revenue uplift? Are we cutting costs? Like, what's actually
What does
happening to
ROI
our
mean?
business? And I think, Wall Street is the early days there too, where it's clear, oh, wow, I can do all of these workflows in 1/10 the time with 1/10 the resources. But what does that mean for how I change my business? And I actually think the same way that what we're seeing in the SaaS apocalypse, where part of that is just about how do you have these SaaS businesses that are per seat completely reinvent their business models to be consumption based. Same thing's going to happen for professional services organizations and Wall Street banks. How do they reinvent themselves to take advantage of this technology to realign their business models for the future? And I think it's early days there. And so a lot of what we do is partner with these firms, not just to help them harness the technology, but to think about what needs to change from an org perspective, from a business model perspective, to make sure you can ride that current of AI.
So you guys get data from PitchBook, FactSet, S&P Global, but you also are in a situation where you have another partner and compete model kind of happening where they are launching their own tools. How do you think about that tension, and what sort of prevents them from cutting you off in a worst case scenario?
Look, those are data providers that have really valuable, unique data that people need. But in the same way that you would never hire an investment banker who only has access to one data source, how can you have an AI investment banker that only has access to a single data source? They are structurally impaired to a certain degree to be able to reinvent the kind of full operating model for finance, because they can only give you the snapshot of the data that they have. And then at the end of the day, we are actually helping them unlock more usage of their data. We're putting it into more hands. We're helping distribute it, and then we're helping maximize all of the kind of derivative works and value you can create on top of it. And so, in a lot of ways, we can help them, monetize that data much more effectively. But it is a kind of confused moment in market where everyone just sees this ballooning AI spend and wants a piece of it. But the same way that the large banks are going to have to figure out how to reinvent themselves and take advantage of the moment, so are these data providers.
So at the very beginning, you were describing Rogo as kind of a helpful tool that was going to make people smarter, but now you're running deal screening, buyer outreach, data room diligence. What changed?
There's been 3 step change moments in the underlying LLMs that have unlocked at each moment in time new sorts of capabilities. The first was, in my opinion, kind of the ChatGPT moment, just GPT-3, 3.5, and 4.0, where it was clear that these things could generate natural language and start to think. They couldn't really do workflows, but they could start to think. That's where we got started. And so we said, hey, these tools can help you gather a little bit of data, help you answer ad hoc questions, be kind of a speed up Q&A tool. Moment 2 was o1 and the introduction of reasoning models. And those were profound in that they allowed the models to think before they acted. And as a result, they could start to use tools. So it wasn't just answering a question, it was going out into the world, running a screen, searching the web, updating a file, and returning that result to you. And that's when you started to see the emergence of agents, and the idea that these systems were not just thinkers, but they could become embodied and use different systems. That really didn't take off until Opus 4.5, Claude Code, OpenClaw, and the combination of both these architectures for handling the models, but also the increasing reliability and intelligence of the underlying reasoning models. And that was probably early December where it became clear, not only can these models quickly query data from FactSet and then update in Excel and then send out an email, they can pair together 500 actions over the course of an hour to do something end-to-end that would have taken you a week. And so it was really those step change moments in the technology that allowed us to kind of broaden our vision for what we could do.
Now, I'm really interested in where this takes investment banking jobs over time. I found a statistic that really interested me. Goldman's New York equity trading desk had 600 traders in 2000. By 2017, there were 2 left, supported by 200 engineers. Why are you laughing? What's left? You don't look surprised.
It's an interesting stat. There were 200 engineers, you said?
Yeah, 200 engineers, 2 left on the equity trading desk. By 2017, AI boom hasn't happened yet, supported by 200 engineers. Could you see something like that happening in investment banking?
I would be curious what the aggregate Goldman Sachs headcount is, right? It's probably ballooned since then. Yeah. And so there's certain functions and titles that no longer exist in title, but the aggregate number of bankers is probably way up. And so are people doing that exact same function that they used to? No. There's probably a new title for someone who's related to equity capital markets that exists today that didn't before. And so I do think the jobs are going to completely transform and reinvent themselves. I think there's going to be more and more a need for people as there's more deal making, right? Partly what AI allows for is now it's easier to serve a huge part of the market that's historically been underserved. There's 300,000 American businesses that have never spoken to a Wall Street banker, that probably don't know what a Wall Street banker provides. And now there's going to be a whole crop of younger enterprising bankers that can say, hey, I can leverage a tool like Rogo and go do business for myself and explore untapped parts of the market. And so I think it's about reinvention. But certainly, like there's certain types of workflows that will never need to be done by a human again, and I think that's a good thing.
So that there's a lot that's really interesting in that. The first is it sounds like you almost have this vision of something kind of entrepreneurial, where there are people who would have been maybe small town bankers before who can kind of do larger and larger transactions. Is that fair?
Yeah, I think that's 100% true. I mean, when I look at the kind of crop of financiers that helped reinvent Wall Street, they were almost all entrepreneurial and invented new types of financing devices or new types of deals, whether it's, Henry Kravis, KKR, or anyone else. I mean, a lot of the kind of, spirit of Wall Street was entrepreneurial, and I think AI will allow folks to do that again.
That's really interesting. The other thing, too, is I'll come out and say I do think the natural endpoint of this is probably fewer investment banking jobs. I imagine there are a lot of people out there who are not like, oh no, fewer investment bankers. But is that fair on my part? And I guess the implicit question is, why do investment banking jobs matter on a societal level, if they do?
I mean, investment bankers help companies get liquidity. They help companies restructure. They help businesses and even governments and whole economies rethink how to shape themselves. It's a very important part of society. I mean, let's draw a page from public equities. And there's fewer kind of folks who sit in the bank coordinating those transactions, but there's a lot more participants in public markets, right? And so, at the end of the day, the folks that are valuing public equities and investing in them versus helping broker, buying and selling of equities, it's very similar underlying work, but now it's just you've transferred where they sit within society, whether they're within the bank or within investment firms. I think as the sort of volume of deal making explodes over the next decade as a result of this technology, I think there's probably more bankers, and there's more bankers to go out into the world and bring online parts of the economy, parts of emerging economies that have never accessed these high finance capital markets resources. But I do think that the job's going to change, and I think the kind of fundamental value proposition will get increasingly served by technology.
Well, and I do think in the way you articulate how jobs have changed on Wall Street over the last even 25 years, a lot of them are technological changes. You actually were telling me about House of Morgan, and I recently bought House of Morgan. It is a very different job that David Solomon has than JPMorgan had, let's say. Or is it actually?
I mean, in some ways, the kind of job of J. Pierpont Morgan of helping, bring investors from the UK into US capital markets to finance railroads and industry and infrastructure, that is what investment banking should be, right? The financing of innovation and growth and emerging economies. And, a lot of bankers do spend their time helping coordinate deals like that, but a lot of bankers spend their time on the drudgery of just doing the kind of underlying analytical work, PowerPoint, Excel, combing through data, and can't be kind of enterprising in the way that the original investment bankers were.
One thing I think about a lot in terms of the AI for anything important conversation is what AI shouldn't do. What shouldn't AI do on Wall Street?
That's a good question. I don't have a good answer to that one.
Really? Okay, so the answer is within reason, kind of everything. There's nothing that you're like, it's not like healthcare where there are certain things that people are like, absolutely not. This is one of those things where we actually
look. There's certain things where you value the human touch, right? So it's like, yeah, healthcare is a great example where like even if the diagnosis is done by a computer, I'd probably rather be sitting with a human to give me the diagnosis. I think a lot of parts of the deal making that we spoke about, the human parts, the emotional parts, Humans are better situated to do that work. But at the end of the day, you have to think about what is the job to be done, what is the service you're providing, and what's the most efficient way to deliver that to the market.
Now, on the Rogo tool itself, you can toggle right between Anthropic, OpenAI, Google. You're squarely in the partner and compete model of AI. What is your relationship to that tension? Because, I don't know, you have some pretty big potential competitors.
In some ways, it is partner and compete, but in other ways, we have a very distinct vision from any of the labs. We want to radically transform Wall Street and high finance and help automate the full end-to-end deal life cycle. And that means building a tool that's not just a large language model and an AI intelligence, but is deeply integrated into capital markets, into the systems of record of deal making, into the outputs, and actually helping coordinate transactions. And that's very, very different. And so the reality is, for an org to get the value that we're providing, it's either DIY, where you mix best of breed of LLMs, OpenAI, Anthropic, open source, so that you can train your own. You have to connect them to all the systems that matter for you. You have to build custom agents on top of it and take the muscle memory of how you do work and put it into prompts and skills and agents. And then you have to enable it throughout the org and actually rethink the org structure. And to do that, it's either build or work with us. And often we're a key part of that work together and partner story. And we work well with OpenAI and Anthropic and Gemini. And for those guys, they are incentivized to maximize the number of tokens that people consume. And so if we're a partner to help them actually, have Wall Street consume more tokens, they're very excited by that.
Do you worry about a Claude Code situation for Wall Street?
Yeah, Claude Code is one of, if not the greatest product of all time today. A lot of enterprises are now waking up and saying, oh my God, did I just spend $50 million on Claude Code? And maybe not seeing that reflect in my top line growth or my product development. So we'll see what actually happens. But Claude Code is so intimately tied to what Anthropic cares about deeply, which is automating software engineering and AI research so that they can see that kind of fast takeoff. It's a very different type of product than what Wall Street banker needs. And at the end of the day, so much of what happens on Wall Street is the coordination and the deal making and the transaction, which is a whole different type of product and software surface area than just LLMs that are very, very good at contributing code in an automated way.
One thing I also found really interesting as I was looking at your list of customers is among them is Lazard. What was it like pitching your former employer?
Lazard, led by Peter Orszag, has always been very forward and future-minded on what this technology is going to do. And they've been both very experimental, both very open-minded to how to reinvent their business. And so they've been great partners. The day I left, the product wasn't ready. And so it was always, let us know how this goes, keep us in the loop. And when we came back, it was because we were ready. And they saw, wow, this is something that is going to be transformative. This is going to be something that's hard to build. We know Gabe. Gabe used to work here. He understands our workflows. Maybe this is something we should take a look at. And they started small and then expanded. And they're still great partners.
One thing I've wondered about too is there are only so many Wall Street banks, right? How concentrated is your business? And what do you think about as you consider expansion? Is it bigger contracts? Is it more customers from different places? What does that look like?
It's a little bit of both, right? So we have hundreds of customers. We probably have 300 customers as of today, which both represent the majority of bulge bracket banks, the longer tail of independents and middle market banks, but then private equity firms, private capital firms, asset managers, hedge funds, public equity firms. There's a huge market of folks who want to participate in capital markets. And so when we think about the kind of group of customers we want to serve, it's just all of those participants.
Henry Kravis, KKR co-founder, finance legend, put money personally in Rogo. How did that come to pass?
Henry and his team met with me at a number of rounds before investing, actually. And so they were along for the story. They saw how we were developing, and they were trying to form a thesis on a lot of those questions you just asked of, what is the need for a vertically focused company in finance? Is Rogo that company? What is Gabe like? And I think it became clear to them over time, wow, this is not just a technology that's going to be a plug-in in Excel and PowerPoint and help, automate PIBs. This is going to be something that helps reinvent what private markets can look like. And it's strategic to us as KKR and us as Henry Kravis in thinking about private markets. And it's so clear that the only way to do this is to intimately understand finance and intimately understand AI. And Rogo's best positioned for it.
It's funny, you and I have talked about your round, but we've mostly talked about financial history. And one of the things I think is very interesting is a lot of folks in tech are very interested in the future. Whereas I feel like you have a real relationship to the past. And unlike venture capital, which as a job is 80 years old or less, maybe 60 or 70, depending on how you count, banking is a job that is hundreds of years old. What are you reading right now?
I'm reading House
of
of
Morgan.
Morgan still.
Yeah, you and I are going to both be. We're going to be sitting here in like 2 years.
It's a long book.
We'll both be still reading
Yeah.
Ron Chernow's House of Morgan, probably.
Yeah, it's great though. I mean, I kind of go back and forth between science fiction, fiction, and historical, nonfiction or historical fiction. But finance, to your point, is a storied industry, and it's a very hard industry to break into, right? There's a lot of antibodies from all sorts of organizations, whether it's the banks themselves, the data providers, the exchanges. And so understanding how we got here and why, Bloomberg is the $100 billion business it is, or why, the New York Stock Exchange exists, or, why JPMorgan is the preeminent bank on Wall Street. It's very important to learning how to approach the whole industry.
One thing I think is really important is I don't know if we have real evidence for a 100-year SaaS company being able to exist necessarily. But there are 200-year banks. Banks can truly be multi-generational endeavors. What does it mean to grow with a bank?
These banks are cemented within the fabric of the U.S. economy, the global economy. And they constantly have to reinvent themselves. And so for me, it's a fascinating moment because I can help them take advantage of AI and think about that next reinvention. And these are not organizations that change overnight and change quickly. And that's partly why they're still around. They are steadfast in what they offer. But this is a moment in time where if they don't radically reinvent themselves, they might not be around in 100 years. And so to be that partner that helps them think through how to harness technology and kind of take advantage of the moment is fascinating.
All right, we're going to bring it all together. The moment around the past and the present, as you kind of think about both, what do you think this is most akin to in terms of a historical moment? Like if there's a good historical parallel for where we sit right now in finance, what is it?
There's two that come to mind. One is the kind of Flash Boys moment in public markets where, it became increasingly clear that you could automate a lot of the exchange work and a lot of the, floor of the New York Stock Exchange work. And as a result, there are a lot more participants in public markets. And there's been all these second order effects on, who can actually be a part of that ecosystem. And I think that's going to happen for private markets too. And then the second type of historical moment I think about is just the kind of invention of investment banking and the idea that this was originally an industry and a practice to help connect, folks with capital to folks that needed capital, or to connect businesses with businesses they wanted to buy, and a kind of return to that moment of what was the original purpose of high finance and a focus on that.
And I think the place I want to end is sort of about Wall Street itself. Wall Street is this really interesting place in the cultural imagination. It is both wildly famous and deeply mistrusted. And one thing I've been sort of turning over in my head that I would love to hear from you is, in 2026, why should the average person still care about Wall Street?
Finance is kind of the lifeblood of the global economy, right? The way money moves around, both at the kind of micro scale, how do I Venmo you to say thank you for, buying me coffee, versus how does a business literally think about buying another business, or how does an economy think about raising capital or raising debt? I mean, that's how we kind of fuel global expansion and progress. And it is those are the arteries of innovation. And sometimes it happens behind the scenes, and sometimes people think that that's kind of a crass way to justify the greed of Wall Street. But I think at the end of the day, that is really the value it provides.
And that's it for Gabe. I think the tension around how investment banking jobs will evolve in the age of AI is a tension we are going to see play out for white-collar workers across America in the years to come. That's it for Term Sheet. I'm Allie Garfinkle, and we'll see you soon.